Total Package Investments Retired 2021, part 2 for this book. Choose 5, taxes and timing. That's the big ideal today. Let's go. All right, now we can start. So people say all the time that the rich get rich and the poor get poor. And, I can understand why they say that. But when people say that, the assumption is that every person who is wealthy got their money through oppression or ill intent or by robbing people or stealing from people. And this just isn't true at all. The data doesn't support that. So I talked about this on this channel in the past. Tom Stanley wrote a book called The Millionaire Next Door. And he said that 80% of all millionaires are first generation rich, right? To become a millionaire in one generation. A very small portion of them inherit their wealth. So it's important to understand that because this is mindset. So here's a question for you. If you knew what was in a wealthy person's mind, would you make more money next year? Yes or no? If you say yes to that, then you agree with me that a large part of this is mindset and studying what wealthy people study about money. They are understanding money in a way that most people do not. Wealthy people understand compound interest and wealthy people understand taxation. And this is the key point that I'm going to be talking about today, taxation. You don't have to be an expert in the taxes, right? I'm not a CPA, but you need to understand certain basic principles about it. And the information is just there. People who are not wealthy, they don't think about interest rates. They don't think about taxation. They think about payments, not how much interest is associated with those payments. That's mindset. Let's just say that you have two people and they both make $35,000 a year. One is earned income and then the other one is investment income. So the question is this: who is taxed more severely? You already know. Earned income is taxed more severely than investment income. So this is the key ideal, right? So in page 119, basically it says that the more you earn, the less friendlier the tax code is. Earned income from a job is taxed most heavily. This is why on this channel, I talk about assets. I talk about stocks, cryptocurrencies, precious metals. Okay. These would be investments. So the caveat though is this: that person who's making $35,000 a year through investments, in order for them to be taxed at 0%, they have to hold that investment for over a year, right? This is called long-term capital gains. And so, all right, so let me pull it up on the screen right here, right? So I have it here on my phone. Now, one thing I want y'all to understand is that this is federal tax, not state tax. So it varies from state to state. But we're speaking about federal tax here. So if you take a look at this right here, oh, I can highlight this. You see, this is why y'all need to get the note, right? So you see here, single, and then you have married. Capital gains, 0%. If you are pulling out or cashing out a security, whether that's a stock or precious metals, under $39,000 a year, you would be taxed at 0%. Y'all see that? I am also going to put the link from IRS in the description, page 11. You can read it from the source itself. So anyway, and if you married, right? So for the married people out there, you actually have more money to work with. $78,000, right? So that means you have the potential to have $78,000 of tax-free income, right? So let's just say that you've been putting money into your stock all over the years, right? Throughout the years, right? And then you're ready to withdraw that, okay? And you can be taxed at 0%. Now, here's the caveat. This is long-term capital gains, not short-term. So what does that mean? What makes it long-term? Anything that you cash out after a year, right? So if you cash it out after a year, zero taxes. Zero taxes. See that? So anyway, I'm gonna put that information in the description. I'm gonna put this link in the description, and I am also going to put the IRS link in the description. But anyway, y'all, that is the video. That is the video. Taxation, right? And timing, right? So if you have a security or stock or something that has appreciated in value, hold it for at least a year. Okay, and this is going to be taxed in a more favorable rate. Okay, and so this is why you need to combine both the frugal life, right? So living within your means, and also you need to become a rapid investor. Okay, if you can bring those two worlds together, live a pretty good financial life. Because if you keep your expenses low and you invest high, then that is a winning recipe. I'm done with this video. If you like what you heard, subscribe to the channel. Grace and peace.